Hey there, Elliot McCracken here. I hope you're having a great week. In today's video, it's 2 of 2 on the importance of why you should meet with a lender sooner rather than later. Now today, I want to discuss with you a word that no one really likes to talk about, but it's so crucial in the pre-qualification process for you to tell everything you can to a lender so that they know what they're working with to help you qualify for the best programs or the best rates. Now that word, and the word of today's video, is budgeting. Now a lender's gonna wanna know all your expenses that show up on your credit report, specifically car payment, credit cards, any child support payments, anything else that could be reflecting on your credit report. But there's also a lot of other things that he should be aware of to see where you're spending your money in order to help get you a game plan in case you need to qualify for more or if you're trying to get a better interest rate. Now we're gonna go through some of these items one by one and share my thoughts with them. But we're gonna start with the car payment. There's a couple things you need to know here. A lot of lenders, if you're within the final 12 months, or 10 months I should say, if you're less than a year out of paying off the car loan, they can view that as not reflecting on the credit report, again, if it's within a 10-month period of being paid off. So let's just say you have a $300 car payment. For every $100 is roughly 10,000 in qualifying power, give or take. Again, don't quote me on that, I'm not a lender, just round numbers. With that extra $300 payment not reflecting on your score, you now may qualify for up to $30,000 more. What would $30,000 do for you? Well, number one, it might get you into new construction, or it might get you the dream home versus feeling like you're settling. So things like this are very important, and unless these are brought to the lender's attention, he's not gonna always know to ask based on what he's seen. Now, car insurance. A lot of people, I myself included, went with the car insurance provider our mom or dad uses, or the ones we've been using since forever. Now, things are changing all the time, and it never hurts to get a second opinion, especially if you're coming up on your yearly renewal on another car insurance provider. If we can save you $500 a year, that's 60 bucks. Again, that's almost $5,000 more that we might be able to qualify you on based on average numbers. And again, that $100 to 10,000 rule. Again, don't quote me on that, I'm not a lender, just round numbers. So if we're saving you 50 bucks, that's about 5,000. Just help you qualify for more. Again, it's not always about the big numbers, the total purchase price. That extra 5 might help your debt to income ratio. I hope that makes sense. If I was confusing, just let me know and I'll try to explain it to you in person. Again, don't quote me on that, I'm not a lender. Now, cell phone payments, here again, we're getting you ready for the purchase process. You might be paying for your brother, your sister, your aunt, your mom. We might be paying for a lot of family cell phones that if we can get them off your plan, help you save money. Now, I don't always recommend the next step. The next one we're gonna talk about is utilities. Sometimes based on where your credit score is and depending on what the lender thinks best for you, sometimes we can add your utilities onto your credit report to help you qualify for more. Sometimes this helps for people who don't have a big established credit, and this helps provide a payment history for things more than like the 1 or 2 credit cards they might have just started with. So again, sometimes adding utilities to your credit report can help. Again, check with your lender, see if that's right for you. The one thing about it I will advise is once you add it to your credit report, if you're late on those payments, it can reflect on your credit report. So it's a double-edged sword, and again, speak with a lender, see what's best for you. Now the next 2 expenses kind of go hand in hand. They're groceries and eating out. Typically, a lot of people spend a decent amount of money in groceries and either a lot in eating out or very small in eating out, but they're very health conscious, I find, and spend a lot of money on those organic and more wholesome foods. So with that said, if we can get you to cut out some of those extras, cook at home more and save some money. Again, this is long-term game plan. This is for those people 6, 12 months out. And if we can get you saving $300 or $400 a month between the two, that's an extra 3 or 4 grand by the end of the year you have towards a down payment just on those 2 categories. And I bet you, if you've never done it, go through your bank statements. I bet you'll be shocked to see how much food you eat out, at least the average person. I know I was shocked when I started adding it up for myself a few years back. Now the next category is going to be student loans. Now obviously lender's going to know, it's going to come up on your credit report what your student loans are, but sometimes there's a conflict of information as far as how much you're actually paying in your student loans. I know several instances where it comes up on the credit report, the payment's this, but in reality it's this, and all we have to do is send a letter of explanation or show proof of what the payments actually are, I should say. The other thing is there are some doctors and nurses programs out there that come up from time to time, specifically for doctors to help them qualify for some of those homes they want to buy without having to factor their student loans against their debt to income ratio. The last one that is really important to talk about, as we've kind of talked about previously, is credit cards. If we can reduce the amount you pay out each month and get you on Dave Ramsey plan, so to speak, where we're getting rid of your small cards, working towards your big cards, and we're saving your monthly going out, we're getting your credit card balances down in the 25 to 30% or paid off. The lender's gonna wanna know what you can handle and help improve on over the next 6-12 months working on these credit cards, and we'll probably make some suggestions. And again, a lot of this category is just cross-referencing, making sure everything's accounted for so the lender can give you the best game plan. Now there's always going to be some other expenses that pop up. Some of those other expenses might have to do with child support payments. Sometimes it'll come up on the credit report as someone being late when in reality you're not late, you're all paid up, and there's that scenario we have to take care of. So regardless of your situation, we want to make sure we catch that today, not later. Meet with the lender today, not later. Thank you so much for watching this video today. I hope you found it very informative. If you would like me to sit down with you and discuss these topics further in detail, please give me a call, text, or email, send me a DM, whatever you want. So if that's what you need, please reach out. Do not hesitate to reach out. I look forward to speaking with you soon. Have a great day. I hope that makes sense. If I was confusing, just let me know and I'll try to explain it to you in person.